What's up, everybody? Happy morning. Good morning. It's Monday. Give me a break. Or, as the Bureau of Labor Statistics calls it, revision day. You know how you sometimes lie about your weight on your driver's license? Well, it turns out the BLS does the same thing with jobs, though. They just told us, yeah, about that whole strong labor market thing. Turns out we overshot by, only 800,000 jobs. No biggie, just miscounted almost the entire population of Seattle. Whoops. This is why when people say, trust the data, I'm like, sure, as much as I trust the calorie count at Cheesecake Factory. So here's the setup. Economists now think March payrolls were anywhere from 800,000 to a million jobs lower than advertised. That's not a rounding error. That's like saying your bank account has $1,000 in it when it's actually $12. And the timing couldn't be juicier. We're heading into a Fed meeting where Powell is under pressure to cut rates. So now these revisions give the Fed political cover. See, we weren't late to cut. We were just working off bad numbers. That's the central banking version of the dog ate my homework. Meanwhile, Trump's White House is already sharpening knives for the BLS, saying, see, weakness started before I came in. And honestly, he's not wrong. The revisions mostly hit the Biden era data. But Trump's also the guy who fired the BLS chief last month for revising numbers downward. So the irony is just delicious here. He's mad at them for being wrong, but also mad at them for correcting themselves. Classic Trump. Stop lying, but also never stop lying. Now, here's the real kicker of the whole situation. Revisions like this matter because they change the narrative. If the slowdown started a year ago, it means the Fed probably should have cut months ago. Instead, they waited, and now we're staring down a labor market cliff. Translation for Wall Street, bad jobs equals good news because it means rate cuts are coming. Except, and here's the new twist, when the economy looks this bad, bad news might just be, well, bad news again, like we said in our video the other day, because you can only sugarcoat so much before people start realizing the emperor's not just naked, he's also unemployed. It's like what they say down here in Texas. You can put lipstick on a pig, but you can't tell me that ain't a supermodel. Anyways, let's talk about Apple next. The company added 450 billion in market revenue or value since July. That's like finding out your grandma suddenly has Jeff Bezos money. Now, why? Relief from tariffs and a court ruling that lets Google keep paying Apple 20 billion a year to be the default search on Safari. It's like Apple's getting an allowance from Google just to exist. But here's the reality check here. Tomorrow, Apple unveils the iPhone 17, and let's be real, the iPhone hasn't been quote unquote exciting since the one that still had a home button. This year, the big feature is, drumroll, skinnier. That's not innovation. That's just Hollywood. What, you made it do cocaine and smoke cigarettes and not let it eat for a year? Investors want AI. They want Siri to stop being dumb. And right now, Siri couldn't beat ChatGPT in a spelling bee if you spotted it 3 letters. Now, the problem is Apple is trading 31 times forward earnings, one of the most expensive stocks in the S&P 500. And if tomorrow's event doesn't include some jaw-dropping AI integration, the stock could tank short term. Historically, Apple stock drops on iPhone reveal days. So unless Tim Cook announces the iPhone makes you breakfast and also calls your therapist, this is probably a sell the news moment. Long-term, Apple's fine. They'll raise prices. They'll sell a foldable iPhone in 2026, and everyone in Brooklyn will line up to buy it, ironically. But short term, the hype is bigger than the substance here. And finally, Robinhood joins the S&P 500. Robinhood, yes, the same app that brought us meme stocks, Dogecoin millionaires, and 19-year-olds who thought they were Warren Buffett because they bought AMC at $6. Robinhood is officially joining the S&P 500. This is huge. It's like the high school troublemaker getting inducted into the Honor Society. Remember, Robinhood was the casino during the pandemic. People stuck at home with stimulus checks and nothing to do thought, why not bet the mortgage on GameStop? And Robinhood was right there saying, sure, buddy, no rules. Now, Robinhood's trading revenue doubled during lockdown. It IPO'd, and after a roller coaster, it's finally stable enough to make the big leagues. But here's the question. Has Robinhood matured, or are they still the frat house of finance? Being in the S&P means every index fund in America now has to own Robinhood stock. So yes, your retirement fund now has exposure to meme stock mania, whether you like it or not. Congratulations, Grandma. You're now a part-time Dogecoin investor. And here's the irony. Robinhood marketed itself as a democratizing finance, but by making it into the S&P 500, it's become a part of the very establishment it pretended to disrupt. That's like Bernie Sanders getting a job at Goldman Sachs. Still, the stock popped 13% today. So hey, maybe the casino just got Vegas Strip legitimacy here. So here's your Monday trifecta. The BLS can't count, Apple can't innovate, and Robinhood can't believe it's finally respectable. And through it all, the Fed sits there saying, don't worry, we've got it under control, which is Washington speak for, we're just as confused as you are with what the hell is going on. Anyways, that's your midday update so far. Make sure you like, subscribe, hit that bell notification, and leave your hottest take in the comments. I'll see you guys in the next video. Love you. Have a great rest of your Monday.